This presentation is delivered by the Stanford Center for Professional Development.
So, good afternoon. Welcome to EE 292H, Engineering and Climate Change. We have a wonderful guest lecturer today, Rex Northen, but we have a few administrative things to go over first for a couple minutes and a little bit of review because we had a number of people just join the class within the last week. So, first off, please, I got so convinced this is a great book for you folks to read that I bought a few copies as group property of the class. That's how you do it, except take the sign-up sheet, put your name and the number on it, and you'll be good. So you could pass the sign-up sheet around. Here, you have just elected yourself the new distributor. That's what heads-up behavior will get you. And let's see. So, yes?
By the way, that's available on Kindle.
Beautiful, which is a less polluting option. So if you've got the money, go ahead and do that. Otherwise, you can borrow these, which I think will just become class property over the years. So the purpose of this course, as we went over last week, is really to provide you with a start on the tools and information that you need so you can make a difference, basically, and an intelligent difference on the challenges brought by climate change. And as we said, I won't review too many slides from last week, but again, for the newcomers, this matters. Science is critically important. It's what's telling us that we have a problem, right? And policy is critically important. Without it, change is really difficult for businesses and regular folks to make. But this class's focus is engineering, and this book that's making the rounds is an interesting example of how to get empowered to make a difference with that. And Rex Northen today will be a very interesting data point for us to figure out how on earth do you fund that once you've had that lightning bolt idea. So here we are. I spoke last week. If you're new and haven't listened to the lecture, please do. They're online through SCPD. And your homework is to write a summary every week of what the class was. So no grades, but you cannot pass the course if you are not writing the summaries. Rex will speak this week. Kimberly Wiefling is speaking next week. She will help us. So here we are with how to fund these ideas. And next week is how to generate ideas to basically impossible problems. So that'll be pretty interesting. The other way of looking at this lineup is, the earth at the middle with all these ideas and problems of money, et cetera.
I have a quick question on reading.
Yes?
There were a bunch of readings that were under
I'll go over it a little bit. Yeah, SGSI 2007 is a beautiful collection, yeah.
Were those readings for this week?
No, you might have been the one who sent me that email of, do we have to read it all this week? So I'll get to that in a second. I changed things based on your feedback. Thanks. What I basically put up was a library of things you might be interested in reading over the quarter. I hope you didn't have too stressful a week trying to tear through all that.
No, I didn't send you that email. I started reading and I stopped after 15 minutes when I realized how long it was.
Yeah, there's too many for 1 week, that's for sure. Here's next week's, but I applaud your enthusiasm. Here's next week's guest lecturer, Kimberly Wiefling. You will enjoy her. Many students in the past couple quarters that I've taught this have really thought she was one of the highlights because she will help you think through all kinds of challenges that you've got even beyond this class. Logistics. Send me an email, please, lafield@stanford.edu if you need anything. If you are not registered in the class but want to hear some class announcements and want to join a mailing list, I'm not going to be passing around an attendance sheet anymore because I can tell by your summaries whether you're here and actively engaged. So please just send me an email if you want to add yourself to the list. So the class lecture summary, that's my attendance. We're starting to lecture promptly at 12:55. That's when the one person with a cross-country sprint could get here by. The CourseWorks webpage, some great readings are available. They are not all mandatory. And so what I have on there is this glorious resource. The SGSI Summer Institute readings from 2007 are a wonderful resource of some basic climate change papers. And they are from the SGSI class was taught by Terry Root and Steve Schneider, the late Steve Schneider. That's how I got to meet them. And it was a fantastic course meant to, within 1 week, so you'll see Monday readings, Tuesday readings, within 1 week to bring people up to speed enough in this area to start, being able to have an intelligent discourse about it. But what I have done is grade out most of the readings, so supposedly you guys can't see them on Courseworks, and I'll only be ungraying them out as we come to where it would be relevant to you to read them. The SGSI readings are kind of on the side. So I've ungrayed out the Monday readings now, which is a lot of readings, so that you can go through that if you want. Then I'll, this week, ungray the Tuesday readings. Read them on the side. They are not mandatory, but they are terrific. Let's see. I've been having you mail your summaries to me. That turns out to be a lot to manage. We've got 33 students registered for the class now, so I have discovered Courseworks will help me with that. And some of you were asking, why isn't this on Courseworks? So I will figure out how to get you to submit your summaries to a Courseworks site, a classwork site. Courseworks, I think I got it wrong here, and I can look at them there. So I'll get that set up as soon as possible because I would love you to have your summaries in by the day after the lecture if possible. It's easier for you to remember and lock it in your brain. I'll try to get that set up this afternoon. Videos of the class are available if you want to review them. But it's better to attend live so you can ask questions. If you are here, SCPD students, it's better to do everything you can, even from remotely. It's set up so you can succeed in that too. Office hours, we could meet before class over lunch upstairs, but I think I can tell from the way today went, I would need an email if you're intending to do that, so I know I better be there by noon. I got there by about 12:20. So, and your homework each week. Please summarize the lecture. I'm suggesting by Wednesday if you're attending class on Tuesday. It's only one thoughtful paragraph. Some of you, by the way, had the most impressive summaries. They were just gorgeous. They were, wow, they really, really got it. That was very nice. Those tended to be the longer paragraphs, although some of them were kind of short with some really insightful things. So thank you. By Sunday night, do some reading for the next lecture. I will suggest ones. Or find your own and let us know what was even more relevant. And email me at least one burning question for the lecturer to consider. Again, sample test case, I didn't get a chance to actually tabulate. The rest of them came in and get them to Rex till yesterday, who, of course, was busy because he's got a lot to do, and he got to look at them a little before class. If you want the lecturers to be able to consider them even more deeply, you might mail them even earlier, and I'll get them on. For next week, the reading. But they were great. To see what you guys are worrying about and thinking about, it promises well for our discussion. For next week, there's the D-School Boot Camp Bootleg that's on the Coursework site. And that is a beautiful little PDF from Stanford's Design School that is meant to take you through some of this design process thinking. And with Kimberly here next week to give you some more ideas of how to really create solutions that answer the real problem. That'll be a good one. Also check out Kimberly's site, weefling.com. And those optional on the side, these SGSI, Stanford Graduate Summer Institute 2007 readings are unblacked out. You can take a look at them. At least once in a quarter, I'd love each of you to suggest some reading, meeting, or lecture, or tell us a research group's thing that we need to be aware of. That would be great. You could even go and do a quick research term project or a quick core dump on what the GCEP meeting or the Cleantech Open was.
So quick question. So the reading is D-School Boot Camp?
And you've got it, yeah, you've got it on the
And that's on
site.
Coursework?
Mm-hmm. And also check out this website, Kimberly's weefling.com website. It will give you a leg up on what the kind of things she can answer are. And then there's all kinds of opportunities. You are in a wealth of opportunities. Some of you, as we know from last week, are real experts in this area already, so you could probably tell us. The ones I know about are Professor Sally Benson's energy seminars weekly. They had the head of ARPA-E yesterday. I couldn't make it, but I think they actually videotape these and you can get them online, so that would be very nice. The GSEP annual meeting, 2-day meeting, is next week. Fantastic. 2 days really get you up to speed in the area quite well. The Energy Club, get on their meeting notices if you aren't already. And nearby, the MIT Club of Northern California has lots of meetings. One that's coming up October 25th is this smart grid one, which is a subject I feel bad that we haven't included this quarter, but you could see it there. The Cleantech Open, Rex will be able to tell us a lot about. And that's in November 8th and 9th is the Academy Awards of Cleantech coming up.
Very good.
And the AGU annual meeting I'm quite fond of because it goes in with my own environmental nonprofit thing, the American Geophysical Union's annual meeting. There's a lot of people there, scientists who worry about ice and oceans, and that's a great one up in San Francisco. I saw 2 hands. You first.
No, there's also the regular Woods Institute seminars. There's also this Thursday, I think, from 3:30 or something.
Thank you. Woods Institute seminars. Okay, I will add that to our own suggestion. Okay. And?
The Atmosphere and Energy Group has seminars on Tuesdays at 12:15.
12:15.
12:15. Oh, that's right now, huh? Okay. Well, they do have seminars if you're ever not going to this class.
Dreadful choice has just been presented you. I suppose I don't have the option, but you do. But if you do, you got to watch the video of this class extra specially, attentively, and write me a great summary. Great. And some of our insights, just one page of our insights from last week, from this gorgeous book, which hopefully lots of you have borrowed now. So this, again, is on the side. This isn't mandatory, but I think it's a great one. Our choices for response to climate change are mitigation, adaptation, and suffering. And that it's a wonderful entrepreneurial opportunity if you want to look at it as an optimist. And one more empowering book, again, not mandatory, but just fun. Tina Seelig, What I Wish I Knew When I Was 20. Any of you read this book? Yeah, isn't that a great book? I ordered 1 copy that I could loan, but you got to give it back. What?
It's on Kindle. So
it's on Kindle. Okay, so if you guys are willing to buy Kindle materials, that's just a beautifully empowering book. So the question to keep in mind for yourselves now, besides all the ones you're going to ask Rex in a couple minutes, what do you need to learn here? What are you going to try? And with that, here is the Cleantech Open subjects. Let's say a little bit about Rex. What, are you introducing yourself, or shall I?
Well,
I shall.
You go for it, Leslie. So.
He is the executive. He knows more about himself than I do, though. Rex is amazing, the executive director of the Cleantech Open. Under his leadership, it has gone from a regional competition to a national competition to an international competition. It has the potential to have, well, it already has made a huge difference in the world in finding funding and fostering the most promising clean tech technologies and teaching crazed engineers how to present their ideas in a way that investors looking for an opportunity can relate to and say, oh, I mean, I think that's just an amazing public service right there. And Rex is an entrepreneur on his own, I mean, in his history. So he knows all the issues that people trying to start something go through. Let's see. The Global Cleantech Open, that's the international one, and an MA from the University of Oxford, so a very classy accent as well. So again, with that, Rex is speaking today, and we went through that. We're set, except we have to get ourselves onto Rex's.
Is there any water in this room?
Oh, no, but you know what? I will go see if I can find you something. How's that?
Thank you very much. You're very helpful.
Okay. Great. Yeah. Oh. Okay. Yeah, I will just turn it off for now and go find you.
All righty. Thank you, Leslie.
First, before I leave, we got to say, this man
That'll do more or less.
extraordinarily busy schedule.
All righty. So let me just redress myself here. So how many of you consider yourselves crazed engineers? Is that the right call? Let me ask you a different question. How many of you had come across the Cleantech Open in some way, shape, or form before you heard about this class? Few of you. How many of you have a terrific lightning bolt idea, to use Leslie's language? I've done this really badly, haven't I? So, you know, have a really outstanding idea you'd like to see funded? It's all going to be theoretical. Hello, come on in. Okay. Well, you've had... Am I the first speaker in this series?
Yes.
Okay. So I'm going to give you a little bit of an overview. Use this process of what the space is about. But I want to kind of set the scene for a second or two and make sure you're clear on what this all means and why I'm here and what the Cleantech Open is and how this all kind of fits together in terms of a Stanford class on engineering and climate change. I'm going to give you a very specific perspective. So what I mean by that is that I'm going to talk from the perspective of somebody who does have a lightning bolt idea, and that's usually how it starts. Entrepreneurs in the cleantech space are usually pretty passionate, and that's both good and bad, and I hope I'll have time to cover the good and the bad of it. But there's a lot to explain about the way that this market works and the way that an entrepreneur from the ground up, from a grassroots perspective, I'm actually distracted by myself up on that screen now. I have to put myself in some blinkers on, can make a real difference. So as a kind of introductory stage in this whole thing, let me talk about what clean tech is and what it all means and why clean tech is important and how the entrepreneur fits into the whole thing. And I've got your questions, and I did have a chance to look at them quite quickly, so let's hope I can find enough time to make sure we answer all those questions, at least most of them. Starting point, because many of you asked this, what is clean tech? It's a bit different from the old language behind green tech. Clean tech is doing well while doing good. And that's a summary of what the Cleantech group here uses as language. Thank you, Leslie, very much, to explain what Cleantech's all about. It's this kind of combination of superior performance at lower costs, which sounds like the kinds of things that engineers do generically, am I right? It's not so much a clean tech thing, but the second thing really is reducing or eliminating negative ecological impact at the same time as improving the productive and responsible use of natural resources, otherwise known as sustainability. And it's that combination of those three things that makes up this clean tech space. It's a space where you have to devise better products that are going to make an environmental difference. So impact is part of it, and impact is a key part of this whole thing. So the kinds of companies that approach the Cleantech Open have to be companies that are going to make an impact of some kind environmentally, and they need to do it in a sustainable way. We categorize clean technologies into these 6 different areas. Renewable energy, which you all know about, solar and wind and the like, that's about energy generation. Energy efficiency is about use of energy more efficiently. Smart power is typically about the distribution of energy. Usually talks about this thing called the smart grid, meters in your home, meters in your business, and the means by which the energy gets to the home and the commercial property. Transportation, air, water, and waste, and green building. Green building is about both the construction and the utilization of building facilities. So better ways of building buildings and better ways of using buildings. Air, water, and waste, very obviously, we're looking for technologies which will help us to mitigate the pollution of water and of the air and the better use of solid wastes, typically. Usually those wastes get burned in some way, shape, or form, obviously emitting some carbon dioxide in the process, but we're talking about the utilization of waste in a better fashion. Transportation is normally about electric vehicles more than anything else nowadays. I'm sure you know about the whole fuel cell progress. Fuel cells really are not taking off in a big way yet. Electric vehicles are starting to come into their own, and particularly battery technologies, the kinds of technologies that we will use in fact, the big issue there, of course, is driving down the cost per mile driven. Batteries are very, very efficient in terms of torque, They're very, very efficient for driving motors. An engine, an electric engine is about 70 to 80% efficient versus about 15% for a gasoline engine or 20% for a diesel engine. But the challenge we have is that the batteries are massively expensive now, so you need to have a lot of money to buy yourself a Tesla Model S or something equivalent to have the batteries to give you something like a 300-mile range. So that's the big issue we're trying to address. Now I'm going to talk about the investment environment. I'm going to talk about macro issues and micro issues. And I'm going to talk about some of the things that are going on right now. So here are some of the questions that we need to address. And rather than kind of peer around, I'm going to pull out a piece of paper so I can kind of read off from here. Some of the big challenges in this space. Well, the first of them is that we haven't reached the stage for most of the world in most of these technologies where we have grid parity. What do I mean by that? What I mean is that it's still cheaper in most instances to buy your electricity from an alternative source, from a fossil fuel source, than it is to buy from a renewable source. We're getting there, and we'll talk about some of the things that are happening. There is a lot of dysfunction right now in Congress, particularly in the US. The whole cleantech space and renewable energy space has become something of a political football, I'm sorry to say. You may have noticed it. In fact, the politicians won't even use the phrases like climate change and global warming right now as a result of some of the things that have been happening there. So we have an environment which is not conducive to this kind of technological development. China, many people think that China is eating our lunch. China just announced in September a $600 billion investment in the smart grid. And it's the kind of thing that the US typically doesn't do. We don't have an industrial policy where the government mandates what's going to happen in the US at a national level. The Chinese most certainly do. And the proportion of electric vehicles and even electric boats is growing very rapidly. If you drive around China, and I've only done it a little bit myself, you will see solar thermal on people's roofs quite commonly. Solar thermal meaning the heating of water by the sun. So China and Europe have an environment which are quite a lot more conducive to this sort of thing, particularly than we have in the US. Entrepreneurial hubris, well, last year the big news was a company called Solyndra. Who's heard of them? When I asked this question a year ago, almost nobody had, interestingly, and it only just happened. But Solyndra has really gone into the public psyche, $535 million worth of taxpayer money sunk. And in the scale of things, it's not really a lot of money, and it's not really a big deal. We waste, unfortunately, at government level, far more money than that on far less worthwhile projects. But nevertheless, it's been picked up, and it's part of this football we've been talking about, unfortunately. So we've had opportunities here which have turned into threats and disasters for the space. And some VCs are pulling out of the space altogether. And some of you in your questions have raised this question. Some VCs are seeing this space as being too capital intensive and too slow to invest in. At the same time, there are some big opportunities. And we are talking, by the way, at the macro level. I promised you that I would start off by talking about some of the big macro issues. These are the issues that you typically can't affect, or the kinds of things you haven't affected yet, okay? Maybe some of you will be having an impact on some of these things over time. Economic mandates. Well, there are a series of potential mandates that could be delivered at a policy level. Again, some of you asked questions about this. Plenty of good examples of little things that happen. The EPA is there delivering mandates and regulations for which regulate water pollution levels and so on and so forth. Lots of those are happening, and plenty of technologies get into the market by virtue of those things. So opportunities. We need to develop US conditions for startups, and we need to find more opportunities for those kind of mandates. In other words, for ways of making these kinds of things happen and mandating that they happen. Environmental mandates are very, very important to us. And as the economy, as the recession that we've seen in the US continues only to be resolved very slowly, as some countries in Europe fall into recession a second time with that double dip. so the economic issues and the environmental issues get tied up. So there are some big reasons that I'm going to come on to in a second why the environment and the economy are going to be driven by clean tech solutions. Market dynamics, technology that's crossed the chasm. Who here's read Geoffrey Moore's book, Crossing the Chasm? Anyone? Well, you guys aren't entrepreneurs yet, but I hope you will read Crossing the Chasm. We're talking about technologies that have reached the stage of being in Main Street. Geoffrey Moore is one of these seminal writers on the whole space. And he talks about early adopters versus what happens when a technology really starts to hit the top end of the bell curve. And technologies that grow through something called the chasm. Basically, it means that as a technology starts to grow, typically we have a little bit of a problem between the early adopter, the kind of crazy guy, the first people that bought plasma TV sets, the first people who have bought electric vehicles and so forth. How do you get from those early guys to the main street, to mainstream US buying these things? So we'll talk a bit about that. And it's also worth pointing out that some VCs are more bullish than ever. Anyone here heard of Vinod Khosla? Khosla Ventures is doing very well, thank you very much, as are some of the other VCs in the clean tech space. And they will bang the drum and basically say that the only reason that VCs haven't made money in clean tech is they don't know what they're doing. You have to make the right kind of investment. It's a different sort of space. So this is the kind of overview of the macro level issues we're talking about. We're still on macro. We're talking about the environment in which we operate. And this series of charts here really just goes to show that in spite of what we think, overall, the investment going into clean tech continues, and it continues to grow. So if you look at clean tech funding trends and clean tech versus overall venture capital, you will see that it's growing at about the same pace overall as the rest of the market. In fact, clean tech since the early 2000s has grown dramatically more quickly than the rest of the VC space. About 30% of all venture capital goes into the clean tech space now, which from a starting point of almost nothing. So we have, over this past 12 years or so, seen a dramatic increase in the total amount of venture capital going in, and it's not falling off. Why? Well, because clean tech is the opportunity, it is the space that's going to grow more quickly than anything else in the long term. All markets are exponential. And what I mean by that is they grow on an exponential curve like this. And we are on that rather frustrating, slow growth of the exponential curve. Things will start to change. As some of these technologies come into their own, as batteries hit the stage where they can be put into vehicles and they can be driven for the same kind of cost per mile. In fact, the cost per mile is much lower, but for the same kind of acquisition cost as a traditional vehicle, then things will really dramatically change. One of the companies that actually applied for the Clean Tech Open and didn't make it was a company called Proterra. And I went to see Proterra's production plant a couple of weeks ago in South Carolina. And it's phenomenal. I mean, they're building electric buses. And these electric buses today cost about $1 million each to buy. And they're competing with diesel buses, which typically cost about a quarter of that. So it's quite a big decision to buy an electric bus for 4 times the price of its traditional counterpart. Why would you do it? Well, in part because there are government subsidies available to you for doing it. But the real reason is to do with the cost per mile. The cost per mile of a traditional diesel bus is about 20 times that of an electric bus. And traditional, and all buses, on average, operate about 45,000 miles per year. Within 18 months, this company reckons that they will have an electric bus for about the same acquisition cost as a diesel bus. So if you can buy these things for about the same price, they should expect to see an exponential growth in their sales. But right now, we're on that slow part of the curve. It's very frustrating to be on the slow part of any curve. But when things start to change, these technologies become much less expensive than their traditional counterparts.
Is that mainly about the battery?
It's a combination of things, and battery technology is increasing in efficiency by about 8% a year, which is a slow exponent, but still, it's an exponential curve ultimately. But in their particular case, it's to do with the fact that they have driven costs out of the manufacturing process, and they continue to drive them. They're using a carbon fiber molding to build the buses themselves, and that's expensive to develop, but it becomes cheaper when you produce it at volume. A lot of these things are to do with scale, fundamentally. It's very expensive to produce 1 gallon of a biofuel, but it's much, 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 much cheaper to produce 1 million gallons. And probably not for another 5 or 6 years will we hit the stage where we're producing millions of gallons of these biofuels that some of you may have heard about, and only when that happens will we start to see that kind of thing occur. It means that in the biofuels space, just to give that particular example, what's happening? Well, biofuels companies are not competing with gasoline. They can't, because gasoline's a commodity, and there are massive refineries producing it, and the drilling and exploration process is well established. So biofuels companies are going into the specialist space of specialist chemicals. Specialist chemicals, instead of costing maybe $1 or $2 or $3 or $4 per gallon, might cost $20 or $30 per gallon. So biofuels companies are starting there. That's how they're getting their start on the exponential curve. But they will eventually drive these costs down through scale to hit the bigger commodity markets. Okay? All right, so venture capital and the overall capital going into clean tech overall is not slowing down. So from a macro perspective, there's plenty of opportunity there. This is a chart which I don't often show. It just shows you the applications that we get. Actually, these are the participating companies, but they're a reflection of the applicants that participate in the Cleantech Open every year. I might as well do 30 seconds on Cleantech Open. Leslie's explained it very well. We are the world's largest accelerator for cleantech startups. So we only work with very, very little companies, and we look for ways of helping accelerate them through the early stages of building a company. Why? Well, because most companies, unfortunately, when they start, when they're very, very young, will fail. Most young companies do not make it past about 5 years. And that wouldn't matter terribly much, except for some of these companies could save the planet. So here we are, crazy non-profity type people that we are, looking for ways to give them the entrepreneurial skills to get through those very early stages in the valley of death and the chasm that I mentioned before, and deliver successful clean tech companies from a very promising clean tech idea. You will see from this, unfortunately these colors aren't very easy to see. Some of them are a little bit confusing. You will see here that we get most of the entries here in the energy space. We get a lot in renewable energy and an even bigger number in smart power. And if I move on, you will see that when it comes to funding, the kinds of companies that get the funding, interestingly enough, and this is at all stages, are the renewable energy companies. Can you see that okay? So what's really interesting to us is that renewable energy, new forms of producing energy, tend to get more of the capital. That could mean venture capital or strategic capital. We'll differentiate between those two things in a second or two, than anything else. This is not something, this is information which we only give out very occasionally, but it gives you the information for the 581 companies in the US who've completed our process thus far, and gives you a feel for where things are going. Again, I hope this helps answer some of your questions about what the trends are, certainly what we're seeing in terms of early stage companies. Should all these early stage companies be going into renewable energy? Well, we'll discuss that later on. Okay, another macro thing. You've all probably heard of the United Nations. This is a screen from Rio Plus 20. The Rio Plus 20 Earth Summit was on earlier this year, and I went along. In fact, this is me on a panel. You can see the panelist next to me is actually falling asleep while I'm talking. Rio Plus 20 was fascinating from my perspective. It was fascinating because there were some macro things going on. There were people out there who were getting stressed about the fact that, in their view, fossil fuel companies are getting more subsidies than green alternatives are. So one of the things here that they did was they got $1 trillion bill, which is their calculation of how much money is going to subsidize oil exploration. They got $1 trillion bill on Copacabana Beach in Rio, and they said, let's turn this bill green. In other words, let's get $1 trillion for alternative sources of energy. It was fascinating also, actually that's not the fascinating, it was fascinating also because there's a big drive there to do a series of things which are very relevant to the entrepreneur. In Rio Plus 20, unlike the original Rio Earth Summit, the reason that Rio Plus 20 was called Plus 20 is because it was 20 years on from the first Earth Summit in 1992. And in 1992, the governments of the world got together and they built a big framework, a big framework agreement, which basically said that we recognize global warming is coming and the world needs to work together, and the Kyoto Protocol came out of that original framework agreement. In Rio Plus 20, none of that happened. In fact, Obama didn't go. Most of the big heads of state didn't turn up in person. European heads were not there this time around. Why? Because there aren't any votes right now, apparently, in this whole area. But what did happen was that there were a whole series of initiatives that were launched. One of them is called Sustainable Energy for All, and Sustainable Energy for All is about providing energy for about half the world's population that don't have adequate access to energy. And another piece of it was about increasing energy efficiency. If we were to just deploy existing energy efficiency technologies, we could double, take from about 14% today. 14% of products in the market have some kind of energy efficiency solution in them. We could double that by 2030. We could help those people who have no access to energy have access. And where are the solutions going to come from? Well, the message from the UN was that it's not going to come from governments. Governments are not going to deliver these kinds of solutions anymore. So where were they looking? They were looking at the entrepreneur. There were a large number of presentations from entrepreneurs. The call was to entrepreneurs to find solutions here. There is therefore a huge macro opportunity for solutions in this space. And entrepreneurs and engineers who are looking to find solutions are a key part of that mix. Jobs, part of the economic mandate that I mentioned. Jobs. This actually shows that the GDP of the US has been growing fairly consistently, actually, since the Great Big Recession, which are those blue bars that are below the line. We had the Great Recession took place. Since then, we've had fairly consistent growth in GDP, but the growth with those yellow bars or yellow columns has not been consistent by any means. It's been erratic and all over the place. At the same time, here in Silicon Valley, things are a lot better. In fact, we're almost back to where we started. We're back to something like 90, so it says 97% of the pre-recession peak here in Silicon Valley. Jobs are a very, very big deal. And in the cleantech space, there is a very big jobs mandate. Anyone got any idea what we use as the fuel source and how much it costs when you build a wind farm? What's the fuel source?
What do you mean a fuel source?
Well, do we need diesel, for example,
Yes.
in a wind farm?
Yes.
We don't actually. We use wind in a wind farm, right?
To build the turbine.
Well, to build them, thank you very much. Thank you. All right. So we don't completely kill the requirement for fossil fuels as part of this. Well, it depends, of course. We might use renewable energy as part of the production process. But the deal is that the fuel source in a renewable plant, in a utility scale plant, is typically free. It's typically free, barring the building piece. Thank you very much for that observation. And the installation. Yes. And the driving the workers to the installation. So all important things. Unless they drive well, no. So, it's typically free, but typically you also have significantly more jobs. Funnily enough, people are looking for ways to take these jobs out of the puzzle because we will drive costs down by so doing. But it's something like 10 times more jobs to maintain a solar plant than it is to maintain a traditional fossil fuel plant, and about 2 to 3 times more for a wind plant. Another macro issue, another area that really affects you all. Being in the US is a really good idea as an entrepreneur. And it's a pretty obvious, it's something put together by Legatum, and all those dots represent different countries. And essentially what it says here is that the economic fundamentals and the environment in which you operate are correlated, surprise, surprise. So where we have the kind of environment where we have venture capital available, where we have rule of law, where people can't steal your ideas, your intellectual property can be properly protected and so forth, so you will tend to increase your propensity to succeed. So in other words, being in the US at a macro level is a really good idea. Entrepreneurship and clean tech, therefore, I posit, are a good place to be. There are lots of reasons why this is going to be an exciting space to be in. Back to the economic mandate for a second. This is actually right back at the beginning of the recession, really, when the Wall Street Journal, Tom Hayes and Michael Malone said the only way the American economy is going to regain its lost health and vitality is to lead the world into the future. Entrepreneurs are the only people who can get us there. I'm going to kind of finish this piece of the puzzle just by talking about what might interest you. This is showing you what's happened within our world, within the clean tech open world. So we're kind of moving towards the micro now, and explain to you that these companies have raised now slightly north of $700 million. These figures are always out of date. So 581 US companies have raised slightly north of $700 million. But what's very interesting from your perspective is that the blue piece there is California. And the Cleantech Opens map, which I don't have here to show you, the Cleantech Opens map covers most of the union, most states of the union. There is a huge amount happening in California. This is a good place to be as an entrepreneur. The same kind of picture applies to patents issued. You can see here that 2/3 of all the patents issued to companies in the Cleantech Opens history have been in California. Now, it's not that surprising. We actually get more applications from California companies than we do from the rest of the country, but no longer more than the rest of the country put together. So now we get slightly under half of all applications come from California and California entrepreneurs. There are people who really, really care about the environment. I happen to be one of them. Leslie is another one of them. We are the crazy people here, I think, Leslie. And some of you probably do. Perhaps all of you do. It's maybe the reason you're here. You know that the environmental mandate is a big one. And the reason I put this slide up is not to talk about the Pacific Gyre, which some of you may have heard of, which is an area the size of Texas, which has a vast amount of plastic in it, which is killing sea life and bird life and the rest of it. And it's not to talk about peak oil, and it's not to talk about the fact that consumption is skyrocketing in parts of the world where there wasn't great consumption, like China and India. And it's not to talk about the fact that we have far much more waste than we can deal with. It's to talk about the fact that there is a big macro impact here in terms of funding companies, because there is plenty of money out there from institutions that care. Venture capitalists, in spite of what they say, typically do not care. Venture capitalists care about the bottom line, and that's really what they're looking for. Many of them will personally care, but they cannot invest their limited partners' money in something which doesn't look like a good economic investment. So the environmental mandate therefore talks to foundations, and it talks to grant-giving organizations of all kinds, including the federal government. The federal government is the source of most early-stage research. The federal government every year issues something like $30 billion for early-stage research, not in our space, unfortunately, into cell research and the like, and that money is appropriated and is spent in universities and the like. So about $30 billion worth of money every year in the very, very early very, very super risky stuff that it takes to get a new drug started. And then that research gets picked up by private companies. It's much less in our space. It's actually quite a difficult number to calculate, but it is a small number of billions of dollars. And most of the money comes from the federal government. It goes through the national labs, and it's used for very early stage research. Plenty of it also goes to universities. So many of you are in the right place to receive that kind of early stage money. Now that macro issue here is just showing you how costs have been coming down. This is mainly because of the Chinese. You will see that in some parts of the world, we've hit the stage where we have grid parity, particularly here in California and other places where the sun shines a lot. It nowadays actually pays you to put PV, solar photovoltaic, on your rooftop. At the risk of you answering the question, can you please answer the question again? Does anyone have a feeling for why it already pays, apart from the sunshine and the fact that the cost of these things have come down? The cost of the solar panels have come down so much. Anyone have a feeling as to why it works to have solar panels on your roof and why it's competitive versus fossil fuel derived electricity delivered to your home over the grid? Any thoughts about that?
I think it's partly related to the fact that peak demand correlates with peak supply.
Very good. Excellent. Excellent. Okay. So that's part of it. These peaker plants are very expensive to run if you need to run them. And generation is very expensive on a big scale because you have to handle the entire spectrum. You have to have enough capacity to deliver at the peak, even when it's not all being used, which is one very good point. Yes?
You don't have the losses in transmission because you're right there.
Have the losses in transmission. Right. Very good. So it's right there. And there's another important reason, which is...
We've got a volunteer. Oh, perfect.
Yeah,
China, they're I forget what the term is. They're helping fund their own companies to drive down the price of solar cells. I forget what the term is.
So they are through manufacturing efficiencies.
Well, no, I believe they what they do is I forget what the word is. They like pay their own Chinese companies like extra to build these types of solar cells, which ends up costing the Chinese manufacturers subsidies. Thank you. Yes.
So government subsidies make a big difference, and we can take advantage of that. Yes, and often the subsidies aren't in so much in the manufacture, but in the construction of the plants and so forth. Yes. So government subsidies can make a big difference. That's right. Yes?
I would think one thing that's helping these days too would be financing. I have a solar system that I paid cash to put on the roof, but nowadays you hear all these ads, they'll put it on your roof for free, basically.
Right.
I mean, they're going to rake it off of your monthly utility bill, basically. But the consumer comes out ahead compared to a normal utility bill. The company gets to install the system.
Right.
It's a win-win.
Right. So the big deal with photovoltaic is the fact that there's a lot of upfront cost. In fact, most of these things cost a lot of money to build them in the first place, and then they're free for a long time, and we don't know how long that's going to be. And one of the big deals is what happens if you sell your house. We know 6 months after you've spent a lot of money on it, and that's a calculation you might have made. You might have said, well, will it increase the value of my house sufficiently to cover the costs, or will I ever move? And those things. But now there are solar leases which are available, and the solar lease in some instances will take all the upfront risk away from you, and the cost of the lease per month is less than your original electricity bill was. So absolutely.
We did a hybrid of that. It was great.
Yes?
Yeah. Partial payment up front, right, in our home.
Right.
And then partial lease.
Very good. And it drives us on to an important topic when we come to talking about how we finance these things, which is the risk factor, because it's all ultimately about risk. All of this is about risk, and one of the big issues and one of the reasons why we're on the slow part of the exponential curve is because there's risk involved. Technologies are risky at the early stage, Scaling them is risky, and they become much less risky when you've crossed the chasm and when you've got into Main Street and things are starting to grow rapidly. Yes. So photovoltaic is one of those technologies which has really made huge strides. Anyone here heard of Andy Kurzweil? What's his name? Ray Kurzweil, sorry. Anyone heard of Ray Kurzweil, who's the inventor of the Kurzweil keyboard? And he's a futurist. He predicted the downfall of the Soviet Union, and he predicted the date, more or less, that a computer would beat a human at chess, and he does this kind of futuristic sort of stuff. And one of the things he says is that markets are exponential, and people don't get this. Venture capitalists, he says, don't get. They think that everything grows in a linear fashion. He said that people misunderstood e-commerce when e-commerce came along, when this kind of drive to the web first occurred. The venture capitalists were expecting to see this, and what really happened was this, and eventually those lines cross, and you get in a very good spot because the market's growing very fast. But back in the early 2000s, venture capitalists were pulling out of e-commerce and web solutions because they were discombobulated by this gap between the exponential and the linear. They thought this was going to happen, and they weren't getting the returns, so they pulled out of that space. Well, of course, the ones that carried on did very, very well, thank you very much. Ray Kurzweil says, because it's an exponential process, 16 years from now, the entire world will be powered by photovoltaic cells. That's what he says. Now, why does he say 16 years? Well, I'll explain. It took about 50 years, more or less, from the very first installation of a local power grid in 1882 in Lower Manhattan by Thomas Edison to the date that we had a national grid and wide deployment, about 50 years. It took about 50 years from the first oil-powered ships in World War I to get to the stage where we had widespread deployment of oil powering ships. It takes about 50 years for these big infrastructural changes to take place. Kurzweil's calculation, looking at the exponential curve and looking at how long since the solar cell was originally developed, we're about 16 years away from that 45 to 50-year time frame. So we'll see what happens. But these are all macro issues. They're all driving out risk. They're all helping us to get to the stage where the environment which we operate in is one where an early stage entrepreneur can really make hay. So the investment environment we've talked about. I'm going to, yes.
I have a question.
Yes,
About
please.
that in terms of you're talking about 16 years, right? So nowadays in the venture capital industry, you have this mentality of put in money quickly and get it out in 3 or 4 years. So that mentality of patient capital that you require for Cleantech and stuff like that, how are you going to sort of bring that in? Because of IT becoming so profitable in such a short period of time, most of the venture capitalists, they want Cleantech to be like that too. In 3 or 4 years, they want their money back 4 or 5 times the returns. So how do you change the mentality among these?
Well, it is the $64 trillion question, right? How do you get VCs to make their return? And unfortunately, the answer for most Cleantech entrepreneurs is that venture capitalists are not going to invest in capital-intensive, long-term, slow-growth projects. And they shouldn't. They shouldn't. It's not what VCs are there to do. VCs are there to put relatively small amounts of money into projects that could get a 10x return in a short space of time. And the VCs who have started projects, there's a very well-known venture capital firm here who spent something like $500 million on nuclear fusion. You may even know who the firm was, but big deal. And I actually don't know where their money is right now, but I suspect that that's not the kind of investment that venture capitalists will typically want to make, and they will find it very hard to make those kind of investments successfully. So, but there are other places where money sensibly will come from, and I'm going to cover those places in this part of the presentation. Okay?
Only 15 minutes left at this.
15. Oh my goodness. Okay. Well, I'm going to kind of power through this, and then I'm going to sort of handle some of your questions. Thank you, Leslie. All right. Okay, so let's just have a little look at some of the types of clean tech funding. That we typically break this into three different areas, three different stages of funding. We talk about the conception stage, that very, very early part. We talk about the seed stage, and we talk about the growth stage. And obviously this slide covers the first two. So the earliest stages, and this is where the Cleantech Open is mostly involved in the kind of help that we want to give to these companies. All right, so conception stage. Any of you who become entrepreneurs in the near future will recognize this, if you don't already, very, very soon. And you will know that there are typically a handful of ways of finding money because at the very early stage of a company, the risk is high, and therefore the discount you have to give a potential investor is very high as well. And you are very limited in the kinds of sources of investment you can receive. So the first of them is obviously self-funding. Most entrepreneurs find the money from themselves, or they put in sweat equity, their own time, unpaid time, to get something off the ground. And of course, friends, family, and fools. I'm sure some of you have wealthy enough friends or family, or even some fools that surround you, fools that will foolishly take the risk of a very, very high risk investment. That having been said, my neighbor just bought himself a $2 million house, not next to me, based on a friend's, family, and fool's investment he made in a friend of his. He thought the guy was onto something and invested in him and did very well out of it. It is the major source of very early stage capital. Incubation. Now, I mentioned early on that a lot of money comes out of the federal government and states and foundations and goes to universities and companies. So companies themselves can be a source of capital. You can get a job, in other words, in a company that's researching a certain space, and they might support you in some way, shape, or form. Google is very well known to do this sort of thing, where they will support their employees to engage in something they think that matters. You're more likely, interestingly enough, to get that kind of support when you're in the kind of clean tech space than you are in a more traditional entrepreneurial space. That there are added opportunities which are to do with the environmental mandate that mean that it's a good place to be at a very early stage. People care. One of the bizarre things we notice in the Cleantech Open is how incredibly passionate the entrepreneurs are. In some cases, it means that they spend too long on what is an idea that will never take off. Sometimes. That's the downside. Tom Kosnick, whom you met a minute ago, professor here, gave me a little book called The Dip a little while ago, and it's a very interesting book. It basically says, it's called The Little Book on when to stick and when to give up, or something like that. And it's all about when it makes sense in life to move on and when not. If you've got a copy of the Dick, I think it's written by Seth Godin, who's the author of many books on marketing. So the stick-to-itness is both an attribute and a downside of being an entrepreneur. But universities and companies are very good places to be when you're an early-stage entrepreneur and the risk is high and you're looking for some way of getting something off the ground. When you move on to the seed stage, when you have something, when you have the beginnings of a prototype or a real prototype, your opportunities start to expand. So there are angel investors, there are competitions and accelerators like the Cleantech Open, and business plan competitions. By the way, the Cleantech Open is not a business plan competition. We do not have anybody write business plans in the Cleantech Open. We ask them to get out of the building. Some of you may have heard of Steve Blank, who's a professor of entrepreneurship at Stanford and at Berkeley. And the Blankian approach to life is get out of the building and find real people who really might buy your thing and ask them, will you buy this thing? Will you buy it? And if you would buy it, will you buy it for the kind of money that would make me a profit? If you wouldn't buy it, why wouldn't you buy it? And we go through a process called product market fit, which is either changing the product or the market until you find a real way of getting this thing launched. So an accelerator can be a very good process to go through to do that. But business plan competitions and business competitions, including the business competition that we run at the Cleantech Open, which is part of our mix, has money at the end of the rainbow. There is a in our case, the grand prize is $250,000 worth of seed investment and services, the kind of services you need to get a company off the ground. So there's another source of potential capital. Government grants, we've talked about them. Universities and national labs, the environmental mandate's very important there. And the new one, which of course is coming along, and is a bit of a watch this space, is crowdsourcing. We haven't seen a lot of success in crowdsourcing in the clean tech space, partly because the total cost tends to be higher, and so crowdsourcing hasn't yet come into its own, but we are looking at various things. By this time next year, Leslie, we may have cracked that nut, so we'll find out.
And we have a reading I will post on by the author's permission on crowdsourcing that I went to a meeting last week. I'll
good.
stick that on our coursework.
Excellent, excellent, excellent. Okay, good. The growth stage. So this is something which, doesn't sound like a lot of you are hitting at this stage, but it's important to know what this looks like when you get to the stage where you have a product. Ideally, you have your first customer. You found somebody who is starting to use this thing and who likes it and will say nice things about you and it. And when you get to the growth stage, your opportunities open up significantly. Doesn't necessarily mean, funnily enough, that you have a product which is in the market, but it's ideal if you do because the risk comes further out of it. Venture capitalists in particular do not like to take risk. They want to have things de-risked. It's a wonderful VC term, as much as possible. There are grants available. The Advanced Research Projects Agency for Energy, ARPA-E, is a source of funding for companies that are, well, between the seed stage and the growth stage. And in their particular case, they will only invest in technologies which couldn't receive traditional funding. So it's they're looking for disruptive, exciting things, and they will only invest them in the energy and related spaces. Department of Energy, more broadly, Department of Defense, there are lots of different areas of government funding which tend to open up to you. Loan guarantees, we obviously talked about Solyndra. BrightSource is a company installing a great big solar utility down in Southern California right now. And tax credits. Many of you may have Energy Star devices in your home. On your refrigerator may have the Energy Star label. That's not direct money that comes to you. It's money that goes to the purchaser, but obviously it's a subsidy, so therefore it helps people to buy your product. Utility rebates, again, are an indirect source. The utilities will rebate a certain amount of money. If you can find a way of making your air conditioner more efficient, for example, they will pay a certain amount of money. Why? Well, for the reason that you explained earlier on, that the peak generation is expensive. So if they can reduce the peaks, then it's worthwhile they're spending actually billions of dollars in providing rebates to people to do that. Venture, well, obviously we talked about this. We are seeing quite a lot of Chinese investment in this space. And there are companies who are both moving to China and receiving investment from China in the US. The Chinese, for reasons explained, have a more controlled environment in which to make venture investments, and therefore the risk for them is reduced. Debt. If you are building something that has physical collateral, then debt is a good source. There are lots of good banks in this space. Silicon Valley Bank, Bridge Bank, and the like are able to take some kind of collateral against their loan. So debt is a good source if you have something physical that you can use to secure it. Project finance requires a project, so not for most of you. Larger angel groups, strategics. Now I'm going to talk about strategics for a second. It's an answer to your question, really, which is venture capital firms really don't want to invest in heavy science. If you've got a new form of material or a coating or something similar, VC firms typically will not invest in those. They like business models, they like low capital intensity, and they're not into the patient capital business. But strategic investors, and that means the likes of Chevron and Dow Chemical, which are the two biggest firms that we work with in this space, have technology scouts, and they're out looking for new ideas, and they're looking for early stage companies that have them. The utilities, interestingly, in California, don't have an R&D department. They bring in, from early stage companies, all of these kinds of things. So strategic investors are much more likely to take something which is heavy metal, which has a long-term impact, a biofuel, some new groundbreaking form of photovoltaic cell and the like, They are the kinds of places for the patient capital, for the big plays, for the big disruptive, expensive. And why not? They have the distribution, they have the marketing, the expertise, and so forth. Alrighty, a new thing coming along, the direct public offering. Now, an IPO it requires you to engage an investment bank, and most of us will not have our own IPO in our lifetimes. They're the kinds of things that companies that grow really big get. More often than not, these companies get acquired, actually, nowadays, particularly by strategic investors, because most of them are looking for acquisitions in the long term. A direct public offering is a new thing, relatively new thing, whereby companies can offer shares to their employees and to their friends and pretty much anybody for a relatively small sum, about $100,000. So direct public offerings, DPOs, you will see more about those as time goes on. And the best of all is revenue. Sell your thing. It costs nothing in terms of equity. Having real customers is the lowest risk and highest reward way of funding a company. So those are the areas. I've given you kind of the landscape. There's obviously a lot more to be done in explaining why all this works and how it all works. But from an introductory lecture on it, I hope this helps you understand the field, the micro field, the macro field, and the stages of getting a clean tech company invested and the process that we engage in. I think I'm going to finish probably here and just say the following, and this I think answers many of the questions that you threw at me. This is Andy Hargaden, this smiling face on the picture here. He is Professor of Entrepreneurship, and he also runs the Energy Efficiency Center at UC Davis. A good guy. He's spoken at many of our events. I'm sure he's spoken at Stanford. He's a terrific fellow who understands the space very well. And what he says is this. He says, ideas don't matter. An amazing thing to say to an engineering class. Good ideas languish all the time. What matters? Execution. It's everything, especially enough with breakthrough technologies. What's he saying? Well, what he's saying is that a terrific team with a mediocre idea is far more likely to get funded, because venture capitalists love great teams, than a phenomenal idea with a mediocre team. It's just one of those things. Now, that switches a bit when you're talking about strategic investors. Strategics will invest in a disruptive, exciting, even expensive, even slow-growing product. But for the most part, when you're talking about venture capital, it is not so much about the idea as the company and the team that will put it together. Why? Because great teams will figure out the challenges if the idea isn't good enough, whereas a great idea with a poor team is very unlikely to make it in the market. Most of these early-stage companies, I'm sorry to say, tend to fail. Okay, so I'm going to stop there, and I'm going to turn to your questions, because I'm down to about 2.5 seconds probably, am I?
2 minutes.
All right.
Or until they throw us out.
All right, well, then, let's have a look. So,
or maybe those who are here, who most wants to leap out of their chair and ask their question live.
And I did try and answer as many of the questions as we went along as I could. So anyone want to ask any questions? Otherwise, I'm going to turn to this and start giving you some... Where are the questions? Here it is. Okay. Any questions you want to throw at me, or shall I just pick out one or two of these? How can an interested citizen who's not an engineer or a green entrepreneur make a difference? What role can lawyers play? Who's the lawyer here? No lawyer? Are you the lawyer? Did you ask this question? Oh, I didn't know. Okay. Okay, lawyers. I'll answer this one very specifically for you. Proterra, the company I mentioned, has on their team, the chairman of the Cleantech Open Board, funnily enough, who is a lawyer, Wilson Sonsini attorney. His whole role is to engage with bus companies, because this is the bus company, with bus fleet operators around the country, get them to place a contingent order, then to run to Washington, D.C. and make sure that the grant money can go out. So he advocates. There's a lot of advocacy in the legal space available. That's one example, but there are plenty more. Lawyers in the U.S. always have a business role to play. So there we go. I won't dwell on it. Okay. All right. So what makes a really successful clean tech company? What are venture capitalists and so forth looking for? Well, I've mentioned they're looking for market, team, technology. But let's start right at the top of this kind of pile here and say that a clearly defined market with a compelling need is the biggest thing. And this is not to do with clean tech. It's to do with any kind of early stage company. A clearly defined market with a compelling need is ultimately what it really comes down to, followed by a team, and in third place, the technology that solves the problem. Unfortunately, most of us start with the technology. We start with this kind of crazy, wonderful idea, and we then look for the market, and we then build the team around it. It's fine as long as you have all three of those things. So,
There was one great question about
yes.
What's the best one you've seen that had failed?
All right. Well, I am. It's a kind of difficult one to answer, but I will tell you the one that hasn't yet made it, and I'm hoping will. I think it's a very good one. A company called Z Dynamics has a product which is based on a mineral called zeolite. And zeolite is abundantly available, but they've discovered a process for A, grinding zeolite up, and B, mixing it in with rubber that will extend the life of the tires on your car by a dramatic factor, 4 or 5 times. And zeolite can be used in toothpaste to make your teeth whiter, and it can solve the challenges of the earth. I think it's partly a cure for cancer. It's an extraordinary thing. So, when the judges, Z Dynamics is back in the game again this year. So we have the Cleantech Open. Often has companies that go through the process multiple times. Z Dynamics came in for the second or third time this year. When they finished judging a few years back, one of the judges said, "If I had $1 million and I could risk it, I'd put my money on them, because what they're doing is so out there." Okay. Well, I think I've run out of time. If there's anything else you want to ask me, I will be here for a few minutes afterwards. If you want to ask me any questions, I'll stick around. But thank you all for your attention, and I hope it was useful.